Thank you for joining Kentucky Public Pensions Authority Tier 2 webinar. During today's webinar, we'll define Tier 2, discuss creditable compensation, what to do if you terminate employment, define service types, how to purchase service credit, and retirement eligibility. We will also review the Tier 2 benefit calculation and health insurance eligibility. We will be covering a lot of information today, but I hope you'll find the information valuable. KPPA administers benefits for over 410,000 members participating in at least one of the three retirement systems. Under the umbrella of KPPA, we administer County Employees Retirement System, often referred to as CERS, Kentucky Employees Retirement System, often referred to as KERS, and State Police Retirement System, also known as SPRS. CERS and KERS have both hazardous and non-hazardous employees, while State Police Retirement System has hazardous employees only. Each member is placed in a tier which is specific to their participation date. There are three different tiers. Tier 1 is for those members with an initial participation date prior to September 1st of 2008. Tier 2 is for members that have a participation date on or after September 1st of 2008 through December 31st of 2013. And Tier 3 is for members with a participation date on or after January 1st of 2014. Tiers 1 and 2 are both considered defined benefit plans, which simply means that a formula is used to calculate the member's retirement benefits, whereas Tier 3 is considered a hybrid cash balance plan, since it uses a specific formula that determines the value of benefits for each participant based on their individual account. For today's webinar, it's important that you know your participation date and that it is between September 1st of 2008 and December 31st of 2013. Knowing your participation date is essential to understanding how your benefits are calculated. It helps determine your retirement eligibility, and it even defines your health insurance tier. If you're unsure of your participation date, log into your member self-service account at myretirement.ky.gov or contact a call center counselor with your PIN at 1-800-928-4646. Now that we understand why it's important to know your benefit tier, let's take a look at how creditable compensation is defined for our members. So what is creditable compensation? Creditable compensation is defined as earnings that must be reported to KPPA and is used to calculate your retirement benefits. Creditable compensation is the same regardless of which tier a member participates. Included in creditable compensation is all salary, wages, tips, and fees, as well as lump sum bonuses, severance pay, or employer-provided payments for purchase of service credit. Lump sum payments for sick leave, if the employer participates in the alternate sick leave program, may also be considered creditable compensation. What's not included is living allowances, expense reimbursements, lump sum payments for compensatory leave, unused vacation pay, and lump sum payments for unused sick leave, unless the agency participates in the alternate sick leave program. One of the biggest misconceptions our members have is that unpaid vacation time will count towards their retirement benefits. When a member takes their annual time as paid time off, retirement contributions are withheld. However, if a member receives a lump sum payment at their termination for the balance of vacation leave, this is not considered creditable compensation and therefore does not increase the member's retirement benefits. It seems the most obvious option to handling your retirement account is to retire once you're eligible. And while that is the ultimate goal, life happens and it doesn't always work out the way we planned. If you were to terminate from your employment before reaching retirement eligibility, you have a couple of options. You may leave your contributions at the retirement system and retire once you reach retirement age. And by leaving your contributions, your account will continue to draw interest, but most importantly, it will guarantee benefits under the tier plan which you initially began participation. For example, if I were to leave employment with state government and go to work in the private sector, but I chose to leave my money with the retirement systems, I would be eligible to take a reduced benefit at age 60 if I have at least 10 years of service, or full benefits at age 65 with at least 5 years of service. If I left the private sector and returned to a position which participates with KPPA, I would pick up where I left off. I would still be considered Tier 2 with the same insurance benefits, same eligibility requirements, and same benefit calculation. When possible, KPPA always encourages you to leave your contributions and service intact, but unfortunately that's not always a feasible expectation. So for those members that are not eligible to retire and cease participation with the systems, the member may take a refund of their account balance. Taking a refund allows a member to receive a one-time payment representing the money that they contributed and interest that was earned. The money contributed by the employer is non-refundable and remains at KPPA. A refund can be paid by a lump sum payment or roll the earnings into another qualified retirement plan. Please note, if you do choose to take a refund and choose a cash payment, KPPA is required to withhold 20% for federal taxes, and you could be subject to additional income taxes and an additional 10% excise tax. Now that we know which earnings are included in the member's retirement calculation, let's discuss the type of service credits that are included in the member's total years of service. Both are an important part of the benefit calculation that we will cover later in the presentation. The member's total years of service are made up of current service, sick leave service, and purchased service. Current service is earned as a contributing member of the systems. For each month that a member earns wages and contributions that are reported for regular full-time employment, the member earns a month of service credit. Those months turn into years and eventually help in determining the member's retirement eligibility. Regular full-time is defined by statute and cites the member must average a minimum of 100 hours per month over a calendar or fiscal year. And for school board employees, regular full-time is defined by statute as 80 or more hours worked per month over the member's actual days worked. The next service type included in members' total years of service is sick leave service. KERS and SPRS members with a participation date between September 1st of 2008 and December 31st, 2013, or Tier 2 members, participate in KPPA's standard sick leave program, and they're permitted to use up to 12 months of sick leave toward their retirement benefits. Standard sick leave is converted into months of service credit at the time of retirement and therefore increases the member's total years of service. Each CERS employer is allowed to adopt their own sick leave policy, therefore participating in a standard sick leave program, alternate sick leave program, or none at all. CERS employers typically limit the sick leave service credit a member can apply to their retirement at 6 months. Sick leave in excess of the 6 months may be purchased by the member at the time of retirement for a total of 12 months. Otherwise, the service is not credited to the member's retirement calculation. Alternate sick leave allows the member to include a sick leave payment in the final compensation calculation, as well as receive service credit. It's important to speak with your employer to determine how your sick leave at retirement may or may not affect you. It's also important to note that Tier 2 members may use their sick leave service credit to count towards enhancing their benefit only. It cannot be used to establish eligibility. Here's an example of KPPA's sick leave conversion chart. You can find this chart on our website at kyret.ky.gov. Now let's go over a couple of examples. Let's assume a member works 8 hours per day and their employer verifies 900 hours of sick leave at their termination. By looking at the chart, I know that in order for the member to receive 6 months of sick leave, he or she must have 928 hours of sick leave at the time of retirement. In this example, the member is 28 hours short from attaining the 6 months. Therefore, the member would be credited with 5 months of sick leave at retirement. The minimum number of hours required for 5 months is 760. Members commonly ask what happens to the hours of leave that exceeds the minimum required. In this case, it would be the difference of 900 hours and the minimum of 760 hours required to attain the 5 months, which is 140 hours of sick leave. Those hours may be used at the member's discretion, following personnel guidelines. For example, the member may need to use those hours for doctor's appointments between now and their pending retirement date. They may choose to donate them to a coworker or they may simply leave the hours on the books. Whatever the decision, those hours will not be used in calculating the member's retirement benefits. The last of the service purchase type to count toward retirement is purchase service. There are over 30 types of potential service purchases, and purchase service must meet some minimum requirements. The service must be a full-time position in accordance with KRS 61.510 and 78.510, and the service cannot be credited to another defined benefit plan. So, for example, if you worked out of state and you wish to purchase that service to count towards your KPPA retirement, you must first take a refund of that service, as you may not have credit in two different defined benefit plans for the same period of time. The employer must provide verification in most cases to purchase the service credit in question. And of course, most purchase types require the member to be participating and vested in one of the systems within KPPA. It's important to note that purchases made after August 1st, 2004 do not count towards health insurance eligibility, with the exception of omitted service, hazardous conversion, and refund buybacks. Also, Tier 2 members cannot use the purchase service credit beyond the three mentioned above to determine eligibility for retirement, disability retirement, or death benefits. It only enhances the retirement benefit. On your screen, you will see a small list of the available purchases, such as active duty military, federal, and seasonal service. For a full list of purchases and eligibility requirements, please visit our website. There are multiple service purchases available upon determining a member's eligibility, but only a handful that do not have service vesting requirements. The repayment of a refund requires only 6 months to validate the purchase, and it's important to note that reinstating service and wages from a refund does not reinstate the member's original participation date. Omitted service, or service where a member was participating in a regular full-time position, and due to an oversight, contributions were not withheld. KPPA requires the employer to pay contributions for omitted service, but allows the member to choose whether they will pay the omitted member contributions or not. In order for the member to receive service credit, both parties must pay their portion. Summer months are months of service in which the member is missing because they did not physically work 12 months in the year due to summer break, typically with school boards. And lastly, hazardous conversion. Hazardous conversion is service that was classified and reported as a non-hazardous position, but has later been classified as hazardous. KPPA will allow the member to convert the non-hazardous service verified by the employer to hazardous service, and therefore changing the retirement eligibility, variables within the retirement calculation, and health insurance contributions. Tier 2 members can purchase service to enhance the retirement benefit, and in some cases, depending on the type, use it to retire earlier or establish insurance eligibility. When you request to see the cost for service, we will prepare an estimate assuming you do not purchase a service and another estimate assuming that you do purchase it. You will need to carefully compare the cost of the service credit against the benefits of the purchase and weigh the cost against the recovery of the investment. Look to see how long it will take you to regain the cost of the purchase. Members with more than one retirement plan administered by the Commonwealth of Kentucky may be allowed to combine service to determine eligibility for benefits, total service credit, and final compensation. Each system will pay a benefit based on the amount of service in that system. We have already discussed the plans administered by KPPA. The other plans in Kentucky are Teachers Retirement System, Legislators Retirement Plan, and Judicial Retirement Plan. For example, John was employed with a local Board of Education in a classified position and accumulated 12 years of service in CERS. He is now employed with the same Board of Education as a teacher and has accumulated 18 years of service in TRS. John would be eligible to retire at age 57 with no reductions in his retirement benefits because he has accumulated a combined total of 30 years of service and meets the rule of 87. He would receive a retirement benefit from CERS based upon his 12 years of service and a separate retirement benefit from TRS based on his 18 years of service. Please note, in order to receive benefits from all the systems, you must submit the required retirement forms to each system at the time of retirement. Now that we know the different service types in determining our retirement eligibility, let's discuss actual retirement eligibility rules for Tier 2 non-hazardous and hazardous members. For a non-hazardous member to retire with full retirement benefits, meaning no penalty, he or she must be a minimum of 65 years old and have at least 5 years of service, or he or she must meet the Rule of 87. The Rule of 87 is when a member's age and years of service, when combined, equal at least 87. Additionally, the member must be at least 57 years old. To retire early or with a reduced benefit, the member must retire with at least 10 years of service and be at least 60 years old. In order for a hazardous member to retire with full retirement benefits, meaning no penalty, he or she must have a minimum of 25 years of service credit, regardless of age, or reach age 60 and have at least 5 years of service. To retire early or with a reduced benefit, the member must be a minimum of 50 years old with at least 15 years of service. On your screen, you will see the formula used to calculate Tier 2 benefits. The formula is final compensation multiplied by a benefit factor multiplied by the member's years of service. Members that wish to retire early will multiply that formula by a percentage which reduces their monthly benefit. To determine your retirement benefits, whether retiring early or under normal retirement, we encourage you to log into Member Self-Service and use the benefit calculator. For the presentation today, it's important to define the variables within the formula to understand the calculation. Let's start with final compensation. Final compensation for non-hazardous members is their last 5 full fiscal year salaries. And for hazardous members, the final compensation is their 3 full fiscal years with the highest monthly average. To clarify, your highest salaried years, or the fiscal years in which the monthly average is the highest. Partial years may not be used in determining the member's final compensation unless the member did not have any full 12-month salaries. At least 60 months are required in the calculation for non-hazardous members, and at least 36 months are required in the calculation for hazardous members. Here's an example of both the non-hazardous and hazardous final compensation calculations. If we use the previous slide as a checklist, we can verify that the calculation meets the requirements as it is defined. Remember, non-hazardous final compensation is based upon the member's last 5 full fiscal year salaries at the time of retirement, and hazardous final compensation is based upon the member's highest 3 full fiscal years of salaries. In both examples, the correct number of years are represented based on their service type. Now that we know our final compensation meets the requirements defined, we can determine the member's final compensation by adding the total money earned over their last 5 or highest 3 full fiscal years, and then dividing by the months of service that are represented within those years. Benefit factors are set by statute and are based upon the participation date, the type of service, and the system in which the member participates. For Tier 2 members, the benefit factor is tiered. The more service you have at retirement, the higher your benefit factor will be, and thus will your payment be higher. The factors are the same whether you are in CERS or KERS. Hazardous factors are also tiered, but they have higher percentages to reflect hazardous duty. For those members that have mixed service, each period of service will need to be calculated separately, but it will all add together for your total retirement benefits. If you are retiring with mixed service, use the benefit calculator on Member Self-Service. The final piece of the formula to retire with full retirement benefits is the member's years of service, which we have already discussed. So let's look at an example to calculate the member's basic annual benefit. In this example, the member is Tier 2, non-hazardous, participating in CERS. We calculated the member's final compensation earlier in the presentation as $42,100. That clearly states that the member is retiring with 30 years, and based on the chart from the previous slide, we will use a 1.75% benefit factor. Let's plug these numbers into our formula. $42,100 multiplied by the 1.75% benefit factor multiplied by 30 years of service gives us a basic annual benefit of $22,102.50. Now let's take a look at a hazardous duty example. On your screen you will see that the member is Tier 2 hazardous duty participating in KERS. We calculated the member's final compensation earlier in the presentation as $44,000. It clearly states that the member is retiring with 25 years of service, and based on the chart in the previous slide, we will use the 2.5% benefit factor. Now let's plug these numbers into our formula again. $44,000 multiplied by the 2.5% benefit factor multiplied by 25 years of service is a basic annual benefit of $27,500. If a member is eligible to retire with a reduced benefit, the amount of reduction will depend on the member's age or years of service at retirement. The reduction amount is the same for all members, regardless of the participation date. An additional percentage is used in the calculation, lowering the retirement benefit. For example, a non-hazardous Tier 2 member has 25 years of service and is age 60. The member is eligible to retire under early retirement because they are age 60 and have at least 10 years of service. If the member chooses to retire at this point, his or her benefit will be reduced to 87%. That is 6.5% for each year away from meeting the rule of 87. Member self-service allows the member to access real-time information on their individual accounts. By clicking on Account at the top of the home screen, you can update your contact information, view your account summary and history, as well as access your member annual statements. Account Summary allows you to view your service credit, contributions, and beneficiary information, while Account History is an overview of your contributions and salaries through the previous fiscal year end. Annual statements are available to view or print from fiscal year 2012 forward. By clicking on Services, you can calculate your first eligible and first unreduced retirement dates by choosing the Benefit Estimate Calculator. The calculator uses real-time information and is typically within pennies of the calculations our counselors prepare in office. Use the Service Purchase Calculator to estimate the cost to purchase service credit, as well as approximate your monthly payroll deduction if you choose to purchase your service via an installment purchase service agreement. You may also request an account balance letter, apply for retirement online, and upload documents to your retirement account. To register for Member Self-Service, you will need 4 pieces of information: your Social Security number, date of birth, 4-digit personal identification number, and your email address. If you do not know your 4-digit personal identification number, or PIN, you can request a new one in the second step of the registration process by clicking Need a New PIN. If you have an email on file, you have the option to request the PIN be sent via an encrypted email. If you do not have an email address on file with KPPA, you may still request the PIN be mailed to the address we have on file. Expect it to be delivered within a few business days via U.S. Postal Service. At the time of retirement, you will have several options to choose from. There are many things you should consider before selecting your retirement payment option. While we are not going to review each payment option in today's webinar, I encourage you to log into Member Self-Service to determine the payment options available to you based on the beneficiary designation and their correlating factors, which will help project life expectancy. In addition, we do have a webinar that covers all the different retirement payment options. It's important to carefully review all your options and understand how each of them work. Who you name as the beneficiary of your account will determine which payment options are available to you. Also keep in mind for most payment options, the member or beneficiary must be receiving a monthly retirement allowance to participate in KPPA's medical insurance program. Member self-service allows the member to assume various contingencies. Editing your beneficiary within the benefit estimator on MSS does not officially change your beneficiary designation. Under limited circumstances, a retiree may have the option to change their payment option and/or their beneficiary. Otherwise, no changes can be made to the payment option or the designated beneficiary on or after the first day of the month the first retirement check is issued. Monthly benefits from CERS, KERS, and SPRS are generally subject to federal income tax. Members have the option to choose to have taxes withheld according to their marital filing status, or they can choose to have no taxes withheld from the payment. Your decision on income tax withholding is an important one, and you should discuss it with a qualified tax advisor. As a retiree, you may also be subject to state income tax. All benefits attributable to service earned on or before December 31st, 1997 are exempt from Kentucky income tax. The portion of the member's benefits earned January 1st, 1998 and after is subject to Kentucky income tax. However, this income may be excludable up to a certain amount. One of the most common questions we are asked is there insurance available to me after I retire? Kentucky Public Pensions Authority may offer insurance to eligible members who are under the age of 65 or to those who are Medicare eligible. Currently, KPPA's under 65 insurance is an Anthem plan, which is offered to state employees. Once a member becomes eligible for Medicare, the member is responsible for paying any fees associated with Medicare Part B, while KPPA may pay a portion or the full cost of the supplemental insurance, depending upon the member's years of service and the level of coverage chosen. Now, this stands true for those members that are under 65 as well. Eligibility for insurance is dependent upon several factors. One important aspect to remember is that to be eligible for insurance, the member or the beneficiary must be receiving a monthly retirement benefit. There are multiple tiers for the medical insurance benefits. The less familiar health insurance tier is the dollar contribution insurance calculation, which determines KPPA's contribution towards the member's monthly premium for Tier 2 members. Eligibility for insurance benefits shall not be provided until the member has earned at least 180 months or 15 years of service in one of the state-administered retirement systems. Once it's determined that the member has attained the 180 months of service at retirement, KPPA will pay a monthly contribution for insurance of $10 for each year of earned service in a non-hazardous position and $15 for each year of earned service in a hazardous position. Upon the death of the retiree with hazardous service, KPPA will continue to pay $10 for each year of hazardous service, provided the spouse is designated as a beneficiary and remains eligible for monthly benefits upon the retired member's death. Now, it's important to mention that the monthly insurance contribution has increased by a cost of living adjustment in each year since July of 2003 and will be increased July 1st of each year in the future by 1.5%. The annual increase will be cumulative and shall continue to accrue after the member's retirement for as long as the monthly insurance contribution is payable to the retired member or to the beneficiary. This concludes our Tier 2 webinar. I hope you leave today with a better understanding of how unique your retirement benefits are. To calculate your own retirement eligibility, I encourage you to log on to Member Self-Service at myretirement.ky.gov. Once you log in, you'll have access to calculating your first eligible and first unreduced retirement dates. You can estimate how your sick leave service will impact your retirement benefits and even apply for retirement online when that time comes. For information regarding your insurance tier, go to kyret.ky.gov and click on Members, Ready to Retire, and then Insurance. This, of course, is intended for general information reference, and so if you do have specific questions, please contact us at 1-800-928-4646. On behalf of myself and the other KPPA staff, we thank you for attending today's webinar, and have a good day.